Back in 2014, two fearless traders, Pavel Dusek and Otakar Sufner, joined forces together. These guys weren't your average Joes. They had the swagger, the skills, and the know-how to conquer the trading world. They knew the ups and downs of the market like the back of their hands. Pavel and Otakar realized that talented traders were stuck in a pickle. They had all the talent but couldn't access the capital they needed. It was like trying to play a symphony without any instruments. They had the vision to bridge that gap. And voila! FTMO was born. These genius founders created a challenge-based evaluation process. It was like American Ninja Warrior for traders, where they had to demonstrate consistent profitability and risk management. FTMO made sure that only the cream of the crop would receive funding. It was like getting into an exclusive club, but instead of dancing, you were trading. But wait, here comes the plot twist. How can a company that understands trading and risk management overlook the fact that each trader is unique? It's like going to a shoe store and being told, "Sorry, sir, we only have one shoe size available. Good luck walking." As a new or aspiring trader, or a trader that needs more money to trade with, that may be considering going the prop firm route, this video is a must-watch for you. You need to understand that success in the prop firm space is dependent on your uniqueness, and chances are very high that you might struggle if you tamper with your uniqueness as a trader. In this video, we delve into the unique dynamics at play, the insidious tactics used by the prop firms, the potential consequences, and the lasting effects that the experience of prop firm trading can have on your trading journey in the long term. Before you go the prop firm route, there are 4 factors about prop firms you might not know, and you need to deeply understand before going that route. And understanding these factors might just save your trading future. Without further delay, let's get into it. Factor 1. Prop firm is a product. Yes, you heard me right. I said product. You see, traders, before embarking on this journey of prop firm trading, you need to know that prop firms are like those fancy sales companies offering you the keys to success and opportunities in the trading world. But in reality, they're just selling you a product. And so you know this product comes with more rules and regulations than a government handbook. You're wooed with promises of opportunities, but when you dig deeper, you realize that they want every single trader to dance to the same tune. Despite the founders admitting to the fact that professionalism can only be achieved in trading through strong discipline and observing one's own rules as seen on their About Us page. Yet, they conveniently forget this fact when it comes to their own rulebook. Well, with their golden products, they're the rule makers and you're the rule taker. It's like having a coach who tells you to dribble the basketball with your nose. Madness. Let's take a closer look at the opportunities they offer. They'll dangle a $50,000 account in front of you and let you control your risk management. Sounds great, right? In fact, some prop firms market their products by claiming you can use the same strategies as the owners. But beware, in one disturbing case, they advocated for 2% risk management, just like the owners. But hold on tight, because if you lose more than 5% of the account, boom, they take it all away. You know what that means? You're only 2 losses away from a heart attack. Talk about being one step away from financial freedom, or should I say the heart attack, if as a trader you have a poor risk appetite or can't effectively manage your emotions. And that's not all. They have this harmless rule where you have to make 8 to 10% of the entire account in just 30 days or indefinitely, as the case for some, and recently FTMO as well. Fair enough. But don't get too excited, because setting a fixed target of 8 to 10% return can create unrealistic expectations for traders. The forex market is highly volatile and returns can vary greatly based on market conditions. Placing undue pressure on traders to meet a specific target can lead to impulsive and risky trading decisions in an attempt to achieve the desired returns. Now let's talk about the forbidden fruit of trading news. They claim it's like cheating the system. If you dare trade news, you'll lose your account faster than you can say economic indicators. By the way, if you want to know more about high-impact news trading and how to trade them profitably, check out the video somewhere up here. With that out of the way, let's get back to business. Ask yourself, how are you expected to navigate the markets if you can't even keep an eye on the news? By discouraging traders from trading the news, they may miss out on opportunities to capitalize on market fluctuations and potentially profit from them. By avoiding news trading, you might miss out on developing your skills and understanding of market dynamics. Wait, there's more. If you think you're a hotshot and want to use a higher lot size, forget about it. They'll slap your hand so fast, you'll think you stole cookies from the jar. They claim it poses too much financial risk, and as such maybe they don't want to pay you out because that means they would have to fork over a substantial amount of money, which serves extremely detrimental to their investors that are risking their hard-earned money for you to trade an account with, except there are no investors. You heard me right. It's all a simulation. And this brings me to the next factor you have to understand about prop firms. Factor 2, there are no investors behind prop firms. Most people believe that big, multi-million-dollar investors are generously granting traders access to their hard-earned money, allowing them to make a side income off their skills and hard work. It seems like a fair deal, right? Let's get practical. Can you request $500 fee from someone you don't know, and in return, you hand them a whopping $100,000 to trade with just because they passed a ridiculous challenge? Sounds too good to be true, doesn't it? Now picture this. You wouldn't hand over your hard-earned money to a trader who only got their qualifications from a rulebook. That's about as realistic as you not hitting the subscribe button right now and turning on your notifications. Of course not. Experienced investors know better. They understand that trading is like a fingerprint, unique to each and every trader. There's no one-size-fits-all approach when it comes to trading, risk management, or even dealing with your trading psychology. It's a fascinating journey that combines knowledge, experience, adaptability, and a deep understanding of your own strengths and weaknesses. So here's the deal. When you're engaging in prop trading, it's crucial to keep in mind that it's more like a dress rehearsal than a Broadway performance. You're in a simulation zone as confirmed in Section 3.13 of the contract. FTMO issues their customers after passing the challenges. New traders can approach it with a mindset of learning and exploration. Remember, traders, prop trading is just a stepping stone in your journey. It's like those wobbly training wheels you had on your first bike. They help you learn, gain experience, and build skills, but they're not the be-all and end-all of trading success. Traders must strive to develop their own trading style, adapt to real market conditions, and continuously educate themselves to become well-rounded and self-sufficient traders. In an alternate world, maybe as an investor, you might say to yourself, well, I'm comfortable giving a ton load of money to a group of traders to trade for themselves while I take a tiny percentage of their profit, while I'm also comfortable taking all the risks too, just for a tiny fee of $100. Make it make sense. This will lead us to our next factor about prop firms you should understand before investing in prop firms. Factor 3. Only 7 out of 10,000 accounts are paid out. Ever wondered why it's so difficult to find any real information on the internet about the statistics and numbers as regards the income and payouts by any of these prop firms during your research? Every month all you see is how much money these platforms pay out, but have you ever wondered why that's the only data they share? Why don't they tell us the percentage of people who buy an account, complete the challenge, pass verification, and actually get paid? How long do funded traders usually last, and how many payout cycles do they go through? Interesting, right? Let me share some statistics gotten from my Forex funds back in October or November of 2021. Out of everyone who purchased an account, only 10% passed Phase 1. And out of that 10%, only 24% passed Phase 2. Sounds impressive, right? But here's the catch, only 3% actually received money. We have no concrete insight into the amount they received. It could have been a substantial sum, or conversely, nothing noteworthy. In reality, only 7 out of every 10,000 accounts are paid out. And mind you, those figures are from 2 years ago. One can only imagine what the current statistics might reveal. It becomes apparent that for prop firms, the focus lies primarily on profit, just like any business, rather than providing education and support to traders. These statistics and their implications should remain at the forefront of every new or aspiring trader's mind. They serve as a stark reminder of the challenges one may encounter on their trading journey and the importance of approaching prop firm trading with caution. Understanding these figures can help traders set realistic expectations and make informed decisions about their engagement with prop firms. While prop firms may offer certain resources and opportunities, it's essential to recognize the potential risks involved. Traders should prioritize their education, seek reliable sources of information, and carefully evaluate the benefits and drawbacks before committing to prop firm trading. By doing so, they can navigate this complex landscape more effectively and mitigate potential negative effects on their trading journey. You might ask, how then have they been effective in pushing these false narratives and trend that has given rise to a flood of fake capital and misinformation that's permeating the industry? The answer to this will lead us to our next and final factor you should consider before using prop firms. Factor 4. Your favorite influencers are in bed with the prop firm companies. You know those respected influencers who seem to have it all figured out? Well, it turns out they have some hidden alliances with prop firms. Yeah, those firms that specialize in trading and investing. These influencers aren't just promoting the prop firms. Some of them are actually becoming investors themselves through a process called white labeling. Let's break down this white labeling concept for you. Imagine you're a manufacturer selling a product and someone asks you to use their branding instead of your own. That's what white labeling is all about. In this case, your beloved influencer approaches an established prop firm, or vice versa, and requests them to set up a prop firm using their software, resources, and people. Of course, it comes with a fee and a percentage of the profit. Sneaky, right? Let's do a quick math. Picture this. You've got $20,000 as your starting capital, and now you are charged $10,000 by a bigger prop firm as an influencer to create a prop firm for you. Let's crunch those numbers and see what kind of wild profits they're raking in. So you hand over that hefty 10 grand, seems little, but treat it as a franchise fee, as an agreement is in place to share the proceeds at certain percentages. So now you're left with $10,000 ready to roll for payouts. Here's where things get interesting. Let's say you charge $500 for a $100,000 account. Sounds tempting, right? Now all you need is 200 people to sign up, and boom, you've made yourself a cool $100,000. Mathematically, that's a 500% profit. Boom. Here's the juice. Before you can even think about paying out those profits, you have weeks and even months thanks to all the phases and verifications you have set up for your customers. Now let's circle back to those previous mind-boggling statistics I shared with you. Remember the percentage of payouts I mentioned? Well, now you can see how it all ties together. With just a little math manipulation and a lot of hustling, your favorite influencers are making bank while you're left wondering how they're living the high life. They know it's only a numbers game, and they have mastered it. Those massive giveaways, those free accounts with mind-blowing perks, they're all part of the grand illusion. The prop firms know that marketing becomes a cakewalk when they team up with influencers. They offer these enticing giveaways worth thousands of dollars, luring you into their world. It's essential to approach these influencer-promoted prop firms with caution and skepticism. While the math may seem enticing, it's crucial to consider the potential delays, verifications, and the possibility that the promised profits may not materialize as quickly as expected. As a new or aspiring trader, it's important to conduct thorough research, evaluate the risks involved, and consider alternative paths that offer transparency and independent trading approaches. Always remember that success in trading requires a well-rounded understanding, discipline, and a critical mindset to navigate the complexities of the financial markets. If you made it to the end of this video, I appreciate you. Kindly hit the subscribe button, like this video if you learned something from it, and turn on your notification bell so you don't miss any of our informed contents when they drop. To your trading success. See you soon and happy trading.